What's up, you guys? So here from OneGlanceTrader.com, and in this video I'll be sharing with you an indicator that in my opinion has a really good success rate in picking market bottoms. And if you want to know what that indicator is and want to know how to get your hands on it, all I ask for in return is that you smash that like button and don't forget to subscribe and hit that bell notification icon. So for those of you who have been investing inside the market since the beginning of 2022, and again we've only had 4 weeks of 2022, and as you can see here, the S&P, well, the Nasdaq firstly, is down 13% year to date. That is absolutely insane. The S&P is down 7.6% year to date, and we are on track for the worst January ever inside the stock market. And now this video isn't about the reasons why and what's been going on. What we want to understand is, when will this pain end, and when then can we start looking at getting back into the market or investing in certain stocks? So you might be in certain stocks, or you might be investing in the S&P and the Nasdaq at the beginning of 2022, and you've realized that you're on a realized or unrealized loss at the moment. So when will this pain actually end? So there are many reasons why, as I mentioned, and I'm not too fussed about that. The market will recover. It's all about when will the market recover and how long we're going to be feeling this pain. So the indicator, and again, you guys have seen me use this indicator a number of times on TradingView, and if you guys aren't familiar with TradingView, it's one of the best free sourcing charting platforms out there. Link is down below if you guys are interested in having a look at that. And the indicator is the OGT GMMA indicator. So the GMMA indicator was built by Daryl Guppy, which is Guppy's multiple moving average indicator. And I've got dedicated videos which I'll link to in the top right corner and down below as well, that goes into the makeup of the indicator. But at a very high level, it is a set of moving averages. So it's a set of short-term moving averages, which Daryl Guppy describes as short-term traders, and then you've got longer-term moving averages grouped together, which are classified as quote-unquote investors. Now, this indicator is free on TradingView. Unfortunately, because there are a number of different versions out there on TradingView for free, and again, you can just type in GMMA and you'll find that. I prefer my own one because it's what I've created and what helps me. If you guys want to download this, what you have to do is, in the link down below, there will be a text file of the code. And what you need to do is go into the Pine editor at the bottom and then just copy and paste the code in here, give it a name, and then add it to your chart. And then what that will do is then save that as your in your personal public library, so you can use it whenever you want to use it. So again, it's absolutely free. And what I've done in this TradingView approach is I have grouped the small term moving averages, and if they are all aligned in the right direction, it's light green, and if they are not in the, if they're pointing downwards, it's light red, and if it's in between this, it is yellow, but you don't really see much yellow in terms of this section over here. Then you've got the longer term moving averages, which are dark green and dark red and blue, as you hopefully can see. I think if we go back to 2020, you'll see the blue over here, which means that they are ranging or indecision inside the market. So that is the basic framework, and really where we want to be. If we're in strong bullish territory, you've got light green and dark green. So therefore the short-term traders and the investors are aligning, and the long-term investors and long-term traders are aligning to the downside. And if you got anything in between, in this example here, you've got the short-term traders are bearish, the long-term traders are kind of indecision, which then eventually turn bearish. So how can we use this to identify market bottoms? And I'll go out there on record and say, for stocks such as like an Apple, a Microsoft, the S&P, the Nasdaq, etc., stocks or indices that generally trend upwards, this is a fantastic indicator to find bottoms, to find pullbacks, to find corrections, to you to either add to your position, or if you are quote unquote buying the dip, these are signals that you can use to help time yourself into the market. And again, the aim here is not to find the exact bottom. The aim here is to find, where the bottom is, where it's starting to pick up momentum, and where that momentum comes in is when we are confident that that bottom is eventually over. And we'll go into some examples of that. So for this strategy, or for this kind of concept to find market bottoms work, what I found is looking at the daily chart originally is the best place to start. And what you're looking for in this particular approach, we're only looking at the long-term moving averages. So in this example, in this indicator, we're only concentrated on dark red, dark green, dark red, and the blue. We're not too fussed about the short-term elements as part of this process. So what we're looking for is, we are looking firstly for the long-term moving averages to be dark red. So if we add in a definitely don't want to add that in there. At the start of that, so we can see here that this is the start where the long-term investors get rid of this. Actually, don't really want this anymore. Don't know why this has actually come up. Okay, doesn't really want to move wherever it's gone. Oh, probably because I've created so many of them. Get rid of that. How many did I make? There we go. Got there in the end. So we now can see now, and we've seen this by when we were looking at the Nasdaq chart in the year to date, down 13%, and you can see here the high, around literally the 3rd of January, when we had that massive move down, it started to come off over there. So in this indicator on the day chart, the 14th of January started to signal that the long-term investors were starting to get bearish on the Nasdaq. Now, what we want to do is just look back in history on when was the last time the Nasdaq, the long-term moving averages were red. If we look back here, and if we zoom in slightly on this so you can see even here the long-term moving averages went blue. It didn't turn red in this scenario here when you zoom in. The last time it turned red was, let's draw a line in there, was at the start of the pandemic back in 2020. So the first thing that we want to do is, if we wanted to analyze this particular situation, is how long did the red, or the dark red, last for? So it lasted up to there to about there. So if we do that in there, so that's as long as the kind of the long-term investors were red in this situation. And then let's leave it until there actually. So now the key thing is, in this V-shaped move, as we all know what happened during the pandemic, is we would have loved to have bought over here, but if we were just using the daily chart, we would have got in here, which, even if you did get in here, you're still doing pretty well over the long term. But we want to get in at this point over here. So how do we do that? So what we do is that we go to a lower time frame, and where we look at the long-term moving averages on the lower time frame to go green during the time where it's been red. So I found, looking at this and looking at a number of stocks and number of charts, and again, it's not going to be 100% accurate, but what I find what works is using the 30-minute chart. So if we head over to the 30-minute chart, And if we just look where we are, let's go straight down to the 20th. So if we go, here, this is the pandemic, or where we drew those two lines on March 2020th to April the 20th. Now, what we're looking for over here is the first time where the long-term moving averages for the 30-minute chart turns green. And you can see that here. If I zoom in slightly, you can see that it's red, it turns blue, which means there's indecision, and then they fan out at this point over here. I can get the right area. Let's turn that a different color. Let's make that one green. On March the 26th is where we got a potential signal to say that the market has bottomed. We may want to start thinking about entering in or starting with a smaller position. So if we zoom back out to the daily, you can see here, it's not predicted the bottom, but it's got us somewhere in between. So let's go back to the 30-minute chart. That will probably help us a bit more in terms of having a look at this. And then, so if we get the ruler out and we do the low all the way to, if we were to enter right at the top of that candle, the Nasdaq jumped up by 33%, which you could argue is a big move and you lost out on 33%. But if you actually look at, and if we go back to let's go to the weekly chart. So let's just say, you even got in here and you got to the high, you still made 90% returns, even if you still had, even if you got out now, you still make 56% return. So losing out on that, 30 odd percent at the bottom for finding the bottom, I think it's something to kind of take into consideration, that it's a safe environment, because the last thing you want is for the market to go back up, to go back down again. And that's why you could use lower time frames, but then you're going to get more false signals of when that bottom actually occurs. And I found, and we'll go through examples where it doesn't work as well, where I found that the 30-minute chart is the best of both mediums. So when you do get the signal to go bullish on the 30-minute chart, the aim here isn't to go fully into your position, is to take a small position and see what happens, and then start increasing your position as the market moves inside your favor. So if we go back to the 30-minute chart and look at where we are today, so as we talked about, the Nasdaq is down 13%. So on the 30-minute chart, this was the beginning where the daily chart has shown that the long-term investors are bearish. And you can see at the moment here, throughout this whole period in the 30-minute, the long-term investors are still bearish. Now we've kind of got this potential support area, and I'm sure you'll have some bullish divergence if you stock on an oscillator like the RSI. But what we're looking for here is for this long-term investors to start turning blue and eventually starts turning green, which then could signify that bottom. And that is what we're looking for at the moment. So if I want to look at quote unquote buying the dip, I wouldn't buy the dip at this stage, because there is no indication or momentum to the upside on the shorter term time frames. Now, this is where you could time it. If you go to a 5-minute chart, for example, and if we go, I'll have to zoom out. So you can see here, you've got examples there, and there, where the longer term moving averages are dark green. So these would have been entry points. Now, if you are one of those that wants to invest, a small amount every single week or on a periodic basis as the market drops, then I would say that using a shorter term time frame like the 5-minute or even potentially the 15-minute chart, there haven't been any on the 15-minute chart as of yet. So the smallest time frame that you can start seeing the long-term moving averages going green is on the 5-minute. So if you're putting in, I don't know, $50 every single time you get a signal where the long-term moving averages on the 5-minute chart, and you're not exposing yourself into a lot of most of your capital, that would be a good thing to do. So that is the kind of overall approach. We look at the daily chart, we look at when the long-term moving averages are bearish. The last time that's happened was in back in March 2020. And then when that happens, we then scale down into in my personal view, a 30-minute chart, and we're waiting for the long-term moving averages to start showing green. So again, if you are a trader or a long-term investor, or your particular stock that you are interested in and wanted to get into it, this is when you would do it. So if we look at, for example, the SPY, for example, so we've got here on the SPY, and again 2020 is over here. So if we go, well, we can see here on the daily, actually, what's really interesting on the daily, on the SPY, you can see that we're not yet bearish from a long-term investor perspective, and we haven't been ever since the pandemic. So if we go to the 30-minute chart and then go to, let's go to the 20th of March 2020, and then we zoom out slightly so we can see the full scale of that, of the pandemic. This was the area here. We would then look to be entering in at about this point over here. So if we look at from a bottom perspective, the bottom was here. If we say it's about there-ish, that's a 17% pickup before you got a signal to go enter into this market, which, that is pretty close, right? 17% in a SPY move is a big thing, but again, it's something there that you can go into there. And that's an example. And again, when this happens, it doesn't happen that often, especially on the indices, as you can see. And this was the last time back in 2019. Unfortunately, TradingView doesn't have the data, but I have looked on Trader Workstation, which allows you to go into a lot more detail. It worked out. You did get a signal here. And again, this is an example of potential, you could argue, false signal, but then your next signal was over here, which is why I'm saying is it's not where you go invest all your money when you see on the 30-minute chart you see a signal. You then start adding yourself in as time goes on. And then if we just look at the Russell, and again I think I did this here, where on the Russell is a good example again where the pandemic situations here. I went into the 30-minute chart, and you get a signal around here, which is a great signal trade, and we can see now on the daily that we are in this kind of bear market situation. But there are times as well, as you can see over here, where we do have the longer term moving average in red. And yes, let's go on to the 30-minute charts. That started around the 17th of August, which is my birthday, if anyone was actually wondering. Let's just go to 17, 8, 20, 21. Yeah, so that would have been this move over here. So you would have entered in. I'm guessing it's that move, but we'll find out in a second. You would have entered in around there. which yeah. So this was the area where it went down. You would have entered in around this area here. And again, even if you did enter in, let's say you get at the high over here, you're still making, 10% return within a space of a few months there. So yes, but for me, this is where you cost average in, and then you'll be down at the moment, but then you do it again. But over the long term, you're there. And again, there are many stocks that have been absolutely decimated. So if we go to like Fubo, for example, a streaming service, and we go to the daily chart, you can see here at the moment, so we've got two opportunities here. We're currently in bearish territory and bearish territory over here, and let's go have a look at this bottom actually. So let's just show you this one over here. So it does work for stocks. I know I'm back on green, but I'm sure you'll understand. The 30th of March 2021. So if we go down to the 30-day, 30-minute chart, 30th March 2021. Let's zoom out as much as we can. Okay, it's quite long. So the first time in this whole thing was over here. So that would have been an option. I'm just going to change the color of this so you guys can see on the daily. And then we actually, because it broke our low, we'll be then looking at another potential one there, which is that. And then that was the official bottom from that perspective. So there was two opportunities inside there. So if we go back to the daily, and again, I'm just showing you this so you guys can see what this kind of looks like. So in this span of where we had long-term bearish, we had two opportunities to get in, and even if you take the worst, the first one where you had a bit of drawdown all the way to its high, which is probably about there, you're still making 67% return as an option there. So in my view, this is something where all stocks and all small cap stocks that are there. So we go back to the 30-minute actually. I'm going to have a look quickly. So in 2022 at the moment, you can see here we did actually get a potential up signal over here. So I'm going to draw that in so you guys can see. And again, it's not an exact science. Alt E inside there. Now if we go back to the daily, so you see in this whole section over here, we've had a situation here where this here is on there, and you may find when you look back at history that the 30-minute chart for more volatile stocks like small caps and like the Russell index, you might want to use an hour time frame instead of a 30-minute time frame. So the way I would suggest it is that if you're looking at stable stocks and stable indices that go trend up over time, then I would say use a 30-minute time frame. But for small caps and for like the Russell, which is comprised of small caps, I would use a higher time frame, so therefore you get less false signals. Yes, you might not get the exact bottom, because the lower the time frame, the closer you're going to get to the bottom, but there's more opportunity for you to not be wrong, and that's what we're kind of looking for as part of this process. So I really hope you've liked that. A bit more of an in-depth video, and again, on the screen now will be the tutorial to understand the GMMA indicator in a bit more detail. But I really hope you like this video, and I should catch you guys on the next one.